Another day, another downgrade for AMD, aka Advanced Money Destroyer. Now, not a lot has changed, let's be honest. The stock has actually gone up instead of down on the downgrades. We've spoken about the previous ones as well, how analysts had price targets of $200, $210, and now they lower it by $80, $90, $100, which begs the question, why did they wait so long to go from a price target of $200 to now $110, $120? Is it purely because the price of the stock has gone down? Or did their conviction truly change? Plus, why do it now, 2-3 weeks before the earnings report, and not after you get answers by management? Next earnings report, earnings call, you can ask some questions and you'll get answers. Why do it now? Is it because you were ashamed that your price target was still so much higher than the stock price is today? Is it because the stock previously was trading extremely high and now it's down quite a lot? It's actually down in the last 6 months by 34%. AMD has a market cap of $192.2 billion. So yeah, lots of questions here, especially since if we currently look at the average analyst estimates for the coming fiscal years, I mean, it's not like suddenly AMD is going to grow 10%. No, it's still expected to grow sales above 20% year over year in fiscal 25, fiscal 26. If we look at EPS, EPS is expected to grow actually much faster than that, 50% in fiscal year 25 and another 38.8% in fiscal 2026. And for the people that say that AMD is super expensive right now, it's overvalued, why do you look at the last 12 months PE? It just doesn't make any sense to me. If I've just shown you that the PE, the E is expected to accelerate much quicker than revenue, why look at what has happened in the past instead of what is going to happen in the future? Of course, we're not 100% sure that they're going to grow 50% in fiscal 25, but I'll show you the trend. And the trend is that the company is becoming more and more profitable. So earnings are going to grow, free cash flow is going to grow. So coming with the comments down in the comment section below with, oh, AMD is trash, it's super overvalued because PE is 100 times. Well, no, that's how you miss the majority of big companies and the majority of big gains. Of course, I'll have to take the other side as well. If you have been buying the stock since $200 on false promises, on the fact that, oh, on a technical analysis basis, it should have rebounded already, we should have been at 200 already, etc., without actually knowing the company, the business, hearing what other companies in the industry are saying, hearing what Lisa Su has been saying, other executives at the company have been saying, knowing how these types of business work, then yes, then I'm sorry to say, even if it goes back up, you are burning money, right? You are putting a lot of money on the table, buying a smaller amount of shares than you could have bought right now with the same amount of money, if that makes sense. Of course, we can't time the market, but sometimes you can understand a trend, you can understand a business. Technical analysis does not tell you what the business is doing, what the industry is experiencing. Just so we're clear. Anyways, before continuing, if you enjoy this type of videos, leave a thumbs up, subscribe if you have not. We're going to go over the analyst downgrade, and there's actually one positive analyst note. Loop Capital initiated with a buy rating and I think $175 price target. So we're going to talk about that. And I do want to correct myself with regards to what I said during the TSM earnings report review. I've showed you this and I've been misled by the person, and I think I'm not the only one that's been misled by that specific person because he's been posting the same thing over and over again. This is an outdated picture, an outdated graph. 27% is not from TSMC's overall orders or revenue. This was specifically towards 7 nanometers, and I appreciate the correction from the commenter for last video, so apologies on that mistake. I also want to thank the following new members of the channel: Mindaugas, I'm sorry if I butchered that name, Johan, Ray, Dimitri, and Bumblebee. I'm proud to say that we have an Autobot here as member of the channel. And of course, if you want to support me even further, do check out the links down in the description and in the pinned comment. Get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. One extra thing here with regards to TSMC, if you missed that review, TSM said that they expect to see 40% compound annual growth rate for AI accelerator revenue over the next 5 years. Of course, big chunk of that is going to be for NVIDIA, but I expect AMD to be part of that spending as well with the next generation MI400, MI350 as well, which we're going to touch on in this video. Of course, for TSM, 53% of the revenue last quarter came from HPC, 35% from smartphone. Now, looking at AMD, and this is what I said, there is no point here, I'm touching on free cash flow. There's no point in telling me, oh, 100 PE from the last 12 months is extremely high, it's overvalued, etc., etc. No, look at what's happening with free cash flow. Free cash flow for fiscal 2024 is expected to be $3.596 billion. That would be up 220% year over year. In fiscal 25, that's expected to grow another 86.1%, and then another 35.4% in fiscal 2026, basically 2.5xing its free cash flow in the next 2 fiscal years. So no, today AMD is not overvalued. Moving on to the downgrade. So we've got one from Wolf here. He says the following. As we highlighted following our visit to Asia last month, we think this setup into earnings is difficult for AMD. ODMs, which are original design manufacturer, build plans suggest only modest quarterly growth this year from Q4 run rates. We estimate data center GPU revenue in the $1.5 to $2 billion range for Q4 and $7 billion for calendar year 2025 based on those checks, well below buy-side expectations of around $10 billion and their prior estimate of $10.8 billion. We've seen numbers around $9.4 to $10 billion. That's the estimated number for 2025. We've talked about that, and that's basically the biggest question mark right now. This analyst modeled 1.75 data center GPU revenue in Q1 2025 and flat quarterly growth for the balance of the year. The analyst lowered his rating on AMD to peer perform from outperform and removed his price target, which was previously $210. Again, no new price target, which begs the question, why keep this $210 for so long? In addition to the potentially weak data center GPU revenue, the analyst said he expects slow PC seasonality, continued weakness in gaming, and essentially no recovery in embedded. We know there is weakness in embedded, there's weakness in gaming as well. Those things will take time to recover, but I do expect the year-over-year comparisons to be much, much easier in 2025. Despite those negatives, the analyst said AMD's upcoming launch of its MI350 AI accelerator should be a significant catalyst when it launches later this year. He expects it to be noteworthy redesign and upgrade compared to the recently launched MI325, which only increased memory loading compared to AMD's initial MI300. On that front, we go back to one of the comments that were mentioned by AMD's executives during a conference. They said the following: MI300 ramping successfully, and now MI325 we launched literally this quarter. We'll start to see revenue in the first quarter next year, and then MI350 second half of 2025. So when we look into 2025, we actually have a much stronger product portfolio versus 2024. Overall, 2025, we feel really good about the opportunities ahead of us, and more importantly, we'll be able to continue to drive the trajectory and the momentum of our business. A couple of weeks ago, we also had Citi that said the following: December notebook shipments increased 8% month over month, ahead of their expectations of up 4% month over month, driven by new product launches and pulling demand ahead of Chinese New Year and potential tariffs. The analyst, who kept his buy rating on AMD and his neutral rating on Intel after the figures, noted that although the notebook shipment fell 7% quarter over quarter, they were above his expectations of an 8% decline, though below the normal seasonal figure of a 2% gain. So all in all, this could be seen as a small positive. Moving on to Loop Capital, they initiate coverage with a buy rating and a $175 price target. They said the following: shares of AMD have traded more in line with peers with dominant revenue exposure to mature end markets, PC, smartphones, industrial. In our view, shares should more accurately reflect some degree of success in accelerated computing, GPU-based data center compute, XPUs, etc., and idiosyncratic market share expansion opportunities in general purpose compute within PC and general server markets. The latter has become more front and center in recent months, given the tribulation at Intel. So at least here we've got one positive note on AMD. He continued by saying, our view is that AMD will prove more triumphant in this market shift versus what the equity markets seem to give the company credit for. He also noted that investor sentiment is quite low. He probably reads the comment section under these types of videos, due in part to weak PC sales. Additionally, investor expectations for AI GPU sales in 2025 may have come down from $10 billion to $8 billion. This is again something we've discussed on the channel. I said I think the analysts, their expectations were quite high. I believe it was HSBC. They had the expected number that they had, I think, was closer to $12 billion or $11 billion or so. And they took it down to around 8 point something billion dollars. Again, the expectations were quite high. So of course, when you put the bar extremely high, then you're setting up this company to fail. But then again, if you want to put a premium on AMD, then yes, this company definitely has to grow the AI GPU sales much faster than expected. Nonetheless, he says AMD will be able to take an additional 10 percentage points of x86 CPU market share from Intel by 2028 in both PCs and servers, while ARM will go at a slower pace than most expect. Lastly, AMD should be able to grab 20% of the data center GPU market by 2028, with custom AI ASICs only accounting for roughly 15 to 20% of the market and Nvidia controlling the rest. I did a specific video about that. I'll try and link it in the top right corner. Based on these assumptions, it is possible for AMD to generate $55 to $60 billion in fiscal 2028, and at high 50% gross margins, AMD could have $11 to $11.5 in non-GAAP earnings per share power in fiscal 2028, which would put the 4P based on these numbers at above 10x. Then we've got another price reduction here at KeyBank Capital Market. They cut their price target for the tech giant by 32%. The firm reduced its target to $150 from $220, citing incremental performance gains and stagnant growth prospects for AMD's MI3, and the numbers will come after that series, depending on which one they're going after, 325, I don't think it's 50. The price target reduction comes as AMD MI325 has shown only incremental performance gains compared to its predecessor, the MI300. Despite the challenges, KeyBank maintains an overweight recommendation for AMD stock. The firm believes that while current AI demand has slowed, AMD is positioned to capture more market share with new product offerings. AMD shares are currently trading around $117, a little bit more, down almost 8% last week and 35% over the past 6 months. KeyBank has also revised its forecast for AMD's 2025 data center GPU revenue down to $10 billion. Again, as you've seen, most of these analysts had super high expectations for 2025. Even $10 billion, I'd be surprised if AMD can achieve that, attributing to the adjustment to a higher proportion of low market skews and lackluster growth in the embedded segment. However, KeyBank remains cautiously optimistic about the company's future, expecting a revival with the release of AMD's MI355 in the latter half of 2025. And so overall, let's be honest, not much has changed. We will have to wait until the start of February to get the next earnings report, but more importantly, the guidance for 2025. I repeat it again and again, the focus is definitely on that AI revenue for 2025. And yes, even if you're a long-term investor, of course, it's important to note what's going to happen, because if it is much lower than expected, then maybe you could be buying more shares at a lower price, right? If you've been catching falling knives, I've been guilty of doing that myself. But yeah, you are paying a certain price for a certain amount of share. And maybe if you follow the business, if you follow the company, and not just these types of things here, if I can draw here a million Picasso lines, it doesn't really tell you what's going to happen with the business or what the expectations are in the industry. Now, again, like I said from the start, this is not an overvalued stock, not even close to it. I think the price earnings to growth is still below 1 and actually below 0.6 or something like that, which means quite cheap. But here it is important to note what's going to happen with the business, what's going to happen with that AI revenue guidance. So all in all, that's about it. Do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.